Hi, good evening, everyone. Nice to see you again. I'm Amy Lei, a stock trainer at the Homely Chart Company, which is a stock training school. Okay, so today's video is the 21st video of my channel, Amy Stock Analysis Daily. And the topic today is still about this claim victory in stock market series. And today is the second part. Okay, so yesterday we have mentioned that it's very important that we have a very good profiting model, right? And we have mentioned the criteria for a good profiting model. And the criteria are, firstly, it must include all the elements of trading strategies, including filter, entry, exit, and stop loss, and also risk control and fund management. We mentioned that fund management is a higher pursuit, and that's not what the general retailers really need for now. That's the higher pursuit. So for retailers, most retailers, the situation is they cannot make money, they lose money. So the most important thing for them is to stop losing money and begin to make profit. And fund management is to maximize profit. That's a higher pursuit, right? And then for risk control, we mentioned it depends on our trading strategies. Means what kind of stocks you pick, your filter strategies, your entry, your exit, and also your stop loss. So risk control actually depends on your trading strategies. Means it's very, very important that we can set up our own trading strategies and effective trading strategies. And secondly, we mentioned the profiting model must reflect regularities of stock market movement. That's to make sure that we can make constant profit. Only by reflecting the regularities of stock market can the model has a higher success rate, right? Okay, and then thirdly, we mentioned the profiting model must be as easy to master and abide by as possible. If it's too complicated, too difficult to abide by or to master, then no use, right? And then yesterday we mentioned that the importance of building our own profiting model, and today I'm going to share with you how to pick the right stock. So means one part of the trading strategies. So our focus in near future would be on the trading strategies. Do you have your own effective trading strategies? Because these trading strategies are the most important part of your profiting model. Okay, and today we will focus on filtration. How to filter the right stock or how to pick the right stock, and what kind of stocks to pick. So firstly, have you realized that the essence of technical analysis is we study the relationship between demand and supply, right? And demand and supply actually is symbolized by the fund flow, fund inflow, fund outflow. If money flow in, then the price would go up. If money flows out, then the price would go down. In the stock market, the fund flow or the money flow is the only reliable lead to profit. If you want to make profit based on TA, you have to refer to money flow, inflow and outflow. How it works? Either it's bullish market or bearish market. As long as money flows in continuously, the price will keep rising all the time. Pay attention to the keyword continuously. Today money flow in, then tomorrow flow out. No use. We need continuous inflow of money. And especially when the market, generally speaking, is weak or in consolidation area, we especially need to pick the stocks with money flow in continuously. Okay, and then the question is, who can pump money into the stock market continuously? For the participants in the markets, we have the institutions, right? So we would refer them to the big boys, and then we have the retailers, and also we have those speculators who in and out very frequently, today several times, or maybe today in tomorrow out, right? So these are the major participants in the stock market. Then among all these three types of participants, who can pump money into the stock market continuously? Who has the biggest amount of money? No doubt it would be the big boys, right? And how, if there is a method for us to track the traces of big boys, then that would be great. That would be wonderful, right? So in the Homely software, we use this indicator called MCD. The full name is called multi-color dragon, to track the traces of the big boys, the retailers, and also the hot monies. And we see the red bar here. The red bar here represents the big boys, and green bars represent the retailers, and yellow bars represent the speculators. We also call them hot money, in and out very frequently. Okay, and so yesterday I mentioned that we'd like to analyze some shares we have mentioned in the previous videos, right? So one of them is called Apple, right? So let's check Apple first. Okay, so when we were checking the performance of Apple, and we mentioned this share in the video, that is when the price is very close to the previous high, right? So it's about to hit a new high, very close to the previous high. Then many people are worried whether or not the price would turn downward from this moment, because previous high always would be a very strong resistance, right? That's the common sense. Previous high usually would be the strong resistance. Then people are wondering, is it too high to chase after rally, chase after the rally of Apple? Because from the bottom until the price reached this previous high, it's already a big rally, right? So then we have no idea. We get lost if without checking some useful indicators, right? Then how about our multicolor dragon we mentioned? So we say we need, if money, as long as money flow in continuously, then the price would continue going up all the time. And then for Apple, do we have a lot of big boys in the share at this moment? We can check. Okay, so currently we see at this moment for multicolor dragon, we see for Apple the value is around 50%. Can you see the value here on the left side? We have 0, 25, 50, 75, and 100. So currently at this moment, when the price is very close to the previous high, the value for Apple is around 50%. As long as the big boys, the red bar, can reach 50 and stay stably around 50, we say the big boys take control. Let's check before this big correction, the performance for Apple, why it can be so strong all the time. Why it can be so strong all the time? You see, from here, this is August 2019 until this year, January. It has been quite bullish all the time. It go up all the time with very little fluctuations or very little corrections, right? So the reason, you see, ever since this moment, that's October 2019, ever since early October 2019, the big boys for Apple has remained very stably above 50 until January 10th, 2020. So why it can be so strong? Because the big boys stay there all the time. They take control for a very long time. The big boys, they pumping money continuously into Apple. That's why it can remain so bullish. Okay, and then when we see the big boys decrease sharply, right? Decrease sharply already below 50%. Then you need to be careful. The big boys may be already taking profit here, especially when you see the retailers appear. When you see the retailers appear here, and once the price in near future drop below of the low price of this key candle corresponding to the first green bar of multicolor dragon. Multicolor dragon, green bar means retailers, right? So as long as the price drop below this candle, I would leave. Means the big boys already taken profit, and we also should follow them. Okay, so means we need to sell here. Okay, so although we have a rebound, then after that drop further, we see the big boys decrease completely, right? Okay, so then we know that for Apple, the big boys used to take control, and we see history would repeat itself, right? And then after that, if we see the retailers decrease towards zero here, and the big boys now are already around 25% and it's quite stably, we know that it might still have greater opportunity in future, and we see the price would go up, go up, go up, go up. And when the price about to reach the previous high, or reach the previous high already here, at this moment, how likely that the price of the drop, or how likely that the price will continue going up? If we see the big boys, it never decrease, rather it keep increasing, then means no doubt we can hold if you have bought previously, because the big boys still pumping money continuously into the market. So see, continue increasing, right? Continue increasing, then we keep holding. So generally speaking, you see the purple line is the moving average for the big boys. We see the purple line going up all the time, means that the big boys have been increasing their fund inflow all the time. Okay, and then that's until now. Of course, sooner or later there will be a day that the price will begin to drop, and then the drop might be a very big scale. That's another topic. We have some methods to do the top escape, but that's another topic. But up until now, we know that for Apple, it's still quite strong. If the danger signal appears, we will know by checking some other indicators. But if we were at this moment, when you see the price reach the previous high, right? And then the big boys increase to more than 50. Increase to, you see here, can you see this candle? Big boys increase to more than 50. That's the moment when we can enter, actually, because this is also the moment when the price about to break up the sideways platform, right? So this is actually a good opportunity to enter after checking the multicolor dragon, right? So without multicolor dragon, you might be worried the resistance at the previous high. But with big boys continuously pumping money into it, then should be no problem. The price would keep soaring up, right? Until now. For short term, still can catch the opportunity. All right. So this is how we can judge whether or not the stock still has a great opportunity in future. It's still strong in future or not, right? And later we also will talk about how to filter out this kind of shares with big boys take control more than 50%. Okay, and then the other share we mentioned about JD.com. Before we mentioned JD.com, it hasn't been listed in the Hong Kong market, right? So you still remember in the previous video about the JD.com's coming IPO, this previous video, I mentioned how do we know whether or not we should buy or not after its IPO, the IPO in Hong Kong. So you still remember I make a comparison between Alibaba and JD.com, right? And because Alibaba also listed in Hong Kong just 1 year ago, just around 1 year ago, right? Roughly 1 year ago. And then I mentioned how do we know whether or not we should buy. Firstly, I mentioned about multicolored dragon, right? I mentioned about multicolored dragon. If after IPO you never see the big boys appear, better not to buy, better not to enter. You see here, although we have 2 days rest, then drop, right? And then although we have some rest here, but it's quite slow, and then until here we have big boys enter, right? So this means that the opportunity might be bigger in the future. But if the big boys cannot increase, we still, because you see here 25% is a very important value. If the big boys never reach 25 and never reach 25 means it's not effective. The big boys hasn't really entered. They are just trying, doing some water testing, but not really have collected enough chips. Okay, so means here means a bigger opportunity for at least for a short-term rally, right? Can you see a short-term rally? And then if for short-term you want to secure profit, in tomorrow's session I will share with you how to secure the profit after you have bought and made some profit for short term or maybe for medium term. I will share with you how to find that proper entry and exits. Okay, but today we focus on the probability or the potentiality of the share. Okay, so for short term, if you have secured some profit and then you see the big boys after reach 50% then decrease again, means it's not that strong. So we will not have great opportunity until the big boys can stay very stably above 50%. Previously, this is a small rally because it reached 50, then drop immediately below and decrease all the time. And here we see the big boys disappeared and then appear again. So this is another time, maybe for short term you can try some, especially when you see in near future if the big boys can increase, right? And then if you see it reached 50% and then drop again, means it's not yet the right timing unless the big boys can stably above 50. So you see every time it reach 50, about to reach 50 then drop, means no great opportunity, no chance, no chance, no chance, no chance, no chance, no chance, no chance. You see retailers predominate, no chance, no big chance. Okay, here we see the retailers disappear completely and big boys increase a bit. For short-term trading, you can try some, but as long as the big boys cannot reach 25%, means not valid, it's not effective. No big opportunity, right? No big opportunity all the time. Okay, so here 50%, we see for several days already stably around 50%. We may have opportunity here, right? If it can increase, then that will be good. If it cannot, then we know no chance. But until now, we see roughly speaking it's quite stable. So we have a higher probability in future the price would rise. Oh, that's up until now. We see the big boys. Once in future, the big boys can stably above 25 and even reach 50%. Always remember 50%. Then we know that we have an opportunity for BABA. But until now, just some small opportunities, right? In between, we have some small ups and downs, but not very great opportunity. And then for, how about JD.com? JD.com, Hong Kong one, I mean. Okay, so you see, for JD.com, the first day after its IPO, we see retailers, so no chance. And in the following days, we see no big boys, means no chance. Although we have 2 days rally, and then after that, it dropped back. So no chance. So for short-term trading, not very good opportunity for JD.com for the new one in Hong Kong, right? So in future, we monitor when we begin to have big boys appear, we can pay close attention. And in tomorrow's session, I will share with you how to find the right entry point. If we see the big boys appear, maybe we have opportunity, we can find a proper entry point, right? That's tomorrow's topic. After we had the entry point, then we have followingly the stop loss, the exit point, then the other trading strategies. But today we focus on whether or not this is the right stock to pick. For now, JD.com, the new one in Hong Kong, currently not a very good one to pick now, right? So that's the state. Okay, so making the right choice is really far more important than working hard. For example, I show you. Today, we know that the markets, recently the market not very strong for Singapore, for Hong Kong, or for US, right? But then you see if the share is already taken control by the big boys, it can go up against the general trend. For example, this is Singapore's UG Healthcare, and today I believe it also go up today. Why it can be so crazy? Can you see the big boys? It can exceed 75% and stay above 75% for a very long time, ever since May 26th until now, more than 1 month already. Big boys very stably above 75%. This is very crazy. If you find such kind of pattern, buy and hold. That's the best choice for you. Buy and hold for this kind of share. I have a lot of numerous such shares. Let's say Hong Kong one. You see, maybe somebody might argue, well, because UG Healthcare, it's about the healthcare, right? So it's let's say it's closely related with the current situation about the COVID-19, right? That's why it can be so bullish. Then how about some others? Okay, so this one is not related with healthcare, right? But still, you see the upward momentum is very strong. It's quite bullish, right? It's quite bullish. So why it can be so bullish? You check the big boys. It can reach 50% and stably above 50% for a very long time. See, a very long time until now. That's why it can be so strong. So always remember, in the stock market, only money inflows is the reliable lead to profit. As long as the money flow in continuously, the price will always go up continuously. And the big boys, as long as they pump money continuously into the market, the price will go up. Whatever kind of stock it is, it's about UG Healthcare, it's about healthcare, or it's about some e-commerce, whatever, doesn't matter. We only focus on the big boys, okay? And then for example, another one, let's say for this one. Can you see that this rally is quite a crazy one, and recently it suddenly become a little bit strong again. For example, this rally, you see how crazy it is? That's 175% in 8 days, 8 trading days. And the problem, the key point is we can pick out this kind of share, you know. We can pick out this kind of share. How do I pick this one? In the Homely software, we have the powerful filter program. For example, I found the program, the big boy is more than 50%, right? So I set the right timing. Let's say if you have filtered on 20th April, you will be able to get this one, because 20th April is the day when the big boys exceeded and more than 50%, right? So I go to the technical filter platform, I pick the right program, I set the date, April 20th, and then I just click filter. It's Singapore market already. Then you will see how many good ones we can get. We only get 3, right? If you have done filter on 20th April on that day with the method here, then you will be able to get this one, the one we are talking about, and another biolytics is also related with the coronavirus, right? And then the other one, we can check them. Okay, so this is the first one, right? And then I also can bring out the signal. Bring out the signal here so that you can see very clearly. The blue signal is the date when conditions satisfied. We have the big boys more than 50% and no retailers. That's why after that I was that it can be so crazy, right? And then the second one we have picked with the filter platform. Yeah, you see this is the date we have picked the stock. That's 20th, right? 20th April. After that we have another 2 days great rally. Of course, after that, the price drop, right? So that's another topic. In future, we have opportunity. We might talk about how to escape after you have made the profit, or how to secure your profit, right? And yeah, and then the last one, this is a unhealthy, inactive share, because you check the candles inactive. So meaningless, this kind of share, we don't check any indicator, just to give it a pass. So means on 20th April, after you have applied the program, the platform to do the filter, you manage to get the very good 2 stocks, 2 candidates for you to trade. So you have been able to make very great profit with this platform on that day if you have chosen to filter based on the program. Okay, all right, that's all about today's sharing. And in tomorrow's session, I will further to talk about the entry and exit, because today we have finished the topic about how to filter the right stock, right? So looking forward to seeing you tomorrow. So bye bye.